So wow.
Yeah. What
What's
did
what's
what did
Bitcoin
Terry
trading at the moment?
16,500 US, I think. It went well into the 15s last night. Um it's what it felt like one of those like election nights or like Brexit voting nights where you don't want to go to sleep. You just can't peel yourself away from getting updates as to what's happening. It was wild. And then I woke up at 4 a.m. Because at my age you kind of need the toilet sometimes in the middle of the night. And then I couldn't put the phone down again, finding out what was going on. But nothing had changed, so maybe it was better that I slept. But yeah, it's been crazy, right? Like, may you live in interesting times. Wasn't that the classic Chinese insult from years ago? Terry Pratchett relaunched it in his Discworld novels.
You're full
Yeah,
of all
like
the
what?
good quotes.
Yeah, well, I think his second book was actually called Interesting Times in reference to that Chinese insult, I believe it was, because nobody wanted to live in interesting times. You want to live in dull times, and this is far from that. But yeah, so it's been a fun week, and it's what is it, Thursday now? It's Thursday now. Yeah,
Only Thursday.
it's Thursday. Feels like, sorry, I should swear on the podcast. It feels like a lot longer than a week. I think we've lived a lifetime in this week. Ranald, you look nearly 50 and you've aged so much. Um,
Yeah, between last episode and this one, I started growing crow's feet on the side of my eyes. Just started appearing.
Welcome to the club.
God, yeah. Um,
So I
so what
was
should we talk
listening.
about?
I was listening to a really good call today. It was I don't know what was
Mhm.
planned. It's probably impromptu, but Raoul Paul was on there. A few other well-known people, and yeah, it was a really good commentary on what's happening, their thoughts and what could happen, and some interesting thoughts around Binance as well. The comment was Binance is everywhere and nowhere. We don't
Yes.
know their shareholders, their board of directors. They've got no proper head office, so it's kind of unnerving when the biggest cat in town is yeah, everywhere
I
and
think
nowhere.
omnipresent, maybe
Mm,
good way of describing it.
mm.
I agree, and I definitely would not have any significant amount of assets on any of the centralized exchanges right now. I saw an interesting quote. I can't remember who it was by now, saying something like custodial exchanges were a bad idea, and that's what's hurting the industry right now, right? Like
I think
as soon
that
as
was
you give,
I think that was Edward Snowden.
yes, that's right. Yeah, it was Edward Snowden. Yeah, yeah, nice. Like, and it got me thinking, and that's right because none of this negative press and this corruption, greed, or whatever is going on is is a reflection, in my opinion, on Bitcoin and what Bitcoin is about and what it gives us and what it tries to solve. I don't think any of this is related to that. This is all related to like pure human greed and human nature, and yeah, like, and I think it's sad that all the headlines or a lot of the headlines will be about Bitcoin's dead again because of all this, and this is what Bitcoin leads to. Because this isn't really what Bitcoin leads to. This is what human greed and corruption leads to.
Yeah, exactly. It's quite funny because it almost feels like this is what Bitcoin was trying to solve for, right? At the end of the day, we're trying to
Yep.
create a system or a trustless system without any intermediaries. And it's shown time and time again when we do have these centralized platforms, ultimately the intermediaries fail us. Um,
Yep.
maybe unintentionally sometimes, but it does feel like it just feels like history's repeating itself every couple of months now. Um,
Mm, mm.
but this time extremely unexpectedly,
So
because
what does it
SBF
look
was
like?
seen as the golden child.
Yeah, absolutely. And what does it look like happened? Does it look like this exchange was using client money and taking bets with that client money? Is it as simple as that?
The way I understand it is they were, yes, in short, yes. So fractional reserving, not holding one-to-one assets on their balance sheet, lending out client funds to generate yield, collateralizing that with a self-issued token,
Hmm.
which sounds a little bit like a Ponzi scheme, I guess.
Hmm.
And I believe that in the current environment where interest rates started going up and credit started drying up, then they were left exposed, and significant withdrawals started happening. There was a lot of activity shorting the FTT token in the derivative markets, and I don't think CZ is a mastermind that initiated or orchestrated this attack. I think he reacted seeing what he saw, and he could have just sold his tokens without announcing it to the market, but chose to announce it. But I don't think we can blame Binance for this. I think we just blame greedy human beings that's using client funds in a way that isn't very ethical. So if you look at what Sam Bankman-Fried said at interviews, I think it was with the SEC, where he's just talking about the corruption in the banking sector and how crypto solves this, and you just listen to the words he's saying, and it was quite recent, and it's just mind-blowing now what he's been exposed of being involved in. He basically lied to the SEC, right? So I would not be surprised if he lands up doing a bit of time.
Yeah.
Do you think that's because he's actually running a US entity as well? FTX.
Well, it was Bahamas entity, wasn't it?
Yeah.
I think it's
the US entity is unaffected by this, but regardless, is the figurehead behind it all. And yeah, I've heard the same thing, that it's going to be criminal.
I guess my question was more because he has a US regulated entity, do you think he's more within the clutches of the US authorities?
Yeah, and he's a US citizen, right?
Okay.
So yes, I think that'll probably count against him. But so where does this leave the industry? Where does this leave the trust in the industry? And where does the industry go from here? Is there a complete refocusing away from trusted custodial third parties, or do we regulate them? Actually, funnily enough, when we spoke, it was a week and a half ago, and Ranald, you mentioned regulation, and I challenged you saying, what do you mean by regulation? Do you mean regulation of the centralized exchanges, or, and I can't remember what the second option I gave you was, but I feel like from what's happened now, it was almost a bit prescient, because centralized exchanges is exactly whether anybody that's holding customer funds, being customer funds in the form of crypto or in the form of fiat currency, those should have to comply with due diligence regulation and ethical reserving. And at the moment,
yes,
that's not happening in the crypto industry. And in the competitive market, and in a market that's going up, you get tempted to take risks with client funds to try and increase your revenue, and then you get caught. So I feel that there should be regulation. If we have to have custodial solutions, and I kind of feel like we do, then those centralized custodial solutions need to be regulated, and they need to comply with typical banking type rules around holding customer funds in an ethical manner. And Binance has come out speaking about proof of reserves, which I don't think they are the first to come up with that concept, but I know Ledden already issued a proof of reserves to their customers, proving that they're holding enough assets to pay out if ever they need to. Interestingly, they did have exposure to Alameda as well. But yeah, I think that kind of concept of proof of reserves is where the industry needs to go. So and to slowly rebuild trust in the industry. But for now, just buy Bitcoin, get it off exchanges, put it on your cold storage wallet, and don't have exposure to. Don't trust. Actually, yeah. What's the Bitcoin saying? Don't trust. Verify. That's what Bitcoin was trying to solve. And Ranald, you said it perfectly. Bitcoin was invented to solve all these problems that we're watching happening in the crypto space.
Yeah, exactly. It's just a shame. Sorry, go on.
No, I was just going to finish off by saying, and when Lehman's collapsed in 2008, I think that saga went on for a few months, from the point when they started having problems to the point where they collapsed. And for FTX, it was 24 hours. So things happen really, really quickly in crypto space.
So Lehman's share price dropped about 20% the day that I resigned from my role at another organization to go to Lehman's. And then, so that was April. And then it collapsed in September. So
yeah,
5 months later.
yeah. Yeah,
So
exactly. And in crypto, it would like 5 hours, right? Like it just compresses the timeline so much, which I think is good because it's like market forces working stuff out, and once they've worked it out, it
Yeah.
happens.
Yeah.
Like I think that's positive, but it's brutal if you're caught on the wrong side of it.
Brutal, yeah. And just about that. So it's my understanding that in all the collapses that have happened to date, and tens of billions of dollars at least have been wiped away from retail and institutional investors, central banks haven't offered to step in to buy any of the assets. Central banks or regulators haven't stepped in to encourage another player to buy the wounded player. So essentially, it's like the theory that the weakest don't, only the strongest survive. So could this be a lesson for traditional markets where if companies set themselves up in a way where they're prone to failure, that they should be allowed to fail, and in retail and institutional investors wear the losses? What do you think?
I think we need to wait a couple more days to see the cascading effects of this collapse. I mean, like FTX haven't officially, gone under, but if they do, I think there's going to be a domino effect of not like there's obviously I'm invested. I have funds on FTX, so from a retail side, yes, we're all affected. But I think what's more, I guess, impactful is all the institutions that have funds on FTX, because FTX as a platform, I don't think is, compared to Binance, it's probably not the best retail exchange platform. So, like, what's going to happen with all the institutional lenders that are just have their funds stuck on FTX, can't pull it out, can't meet their own margin calls because they're all their funds are just locked up. So it's hard to say whether what's going to happen over the next couple of days. Like every hour feels like a day for me at the moment.
But I'd like to suggest that this is extremely painful. All day I was just scanning the news and listening to reports and tuning in. It's not good. It's not a good time. But the GFC, the can was kicked down the road. Europe bailed out their banks. They didn't write down the value of their assets down to appropriate levels. And so we're left in a really long period of zero or very low or negative interest rates. Europe's only just, I think, started to get out of negative interest rates. So, like, I guess what I'm saying is the pain's going to come, but how quickly do you want to take the pain? This is one of the reasons why Bitcoin was created, because central bodies stepped in to bail out, and they shouldn't have really bailed out like they did. We saw what happened. The money went to the wrong places, and the money supply increased. Quantitative easing stayed on the balance sheet for way too long. Interest rates stayed too low for too long, and we're in the situation we're in now. Inflation's very high. So
yeah, so it's interesting that you're saying how there's no central bank to help bail any of the failed parties out in the crypto space, but at the moment it almost feels like any related companies will obviously bail themselves out, which is exactly what happened. So one of the theories that I saw was Alameda was already heavily in the red after the Luna Terra 3AC collapse, and they effectively got bailed out by the sister company of FTX in arguably unethical way, giving you whether or not they're using client funds or plugging the balance sheet holes with a token that they've printed out of thin air. So it's almost like the industry is self-regulated, where related companies are kind of covering for each other, but in the very same manner, they're just kicking the can down the road, right? This should have happened 3-4 months ago, but instead now it's like, okay, it's just going to all collapse even harder than previously.
So do you think Bitcoin still has a future? Funny money, fairy dust, smoke and mirrors. That's what friends have been saying to me.
Yeah. Well, I still see the fundamental use case for Bitcoin being stronger than ever. I think that, when all this dust settles, I still think that Bitcoin will still have like a tribe of people that support it and fight for it. And it's just whether or not they're able to, slowly increase in numbers or not. But like what Bitcoin gives us, that whole ability to be self-sovereign and not trust third parties. Like that's exactly what it's all about, right? And all these all the collapses in the crypto space have all been trusted third parties, and we've just got to get out of the habit of trusting third parties. Like you don't need to trust anybody with Bitcoin. You can buy it like directly onto a cold storage wallet. You don't even have to hold it on an exchange account for more than for any time. It can go straight into your cold storage wallet. So there's no need to. I suppose you send money to that exchange or whatever, so you probably have some credit exposure briefly, but you don't have to hold assets there, right? Like we've got to get out of the habit of doing that. So that's what I'm taking away from this, and maybe there's also a little, like I know we spoke on the last call about trying not to be in an echo chamber and trying not to be toxic maximalists, but every time an event like this happens, it's going to create more Bitcoin only maximalists, or it'll scare them away from the industry completely. But if they stay, more and more will just become Bitcoin only, because Bitcoin seems to be, well, it is by its nature above corruption itself. It may be used in corrupt ways, but itself is pure, and therefore, like, why not go Bitcoin only if you're supporting separation of money and state? That's the only one you need to hold. That's my view. I mean, the other speculative players look more and more risky every time something like this happens. Like Solana is now pretty much gone, right? Solana, I mean, I'm sure it will survive in some form, but because Solana was so much of the Sol token was owned by FTX and it was supported by them and Alameda Research, like I think right now a huge amount of Sol is being unlocked from staking, and they're going to probably flood the market and the price will crash another 30-40% today. But maybe not. Maybe I'm wrong. Maybe that's priced in.
So
but essentially
from about $40 down to $14.
Yeah, I mean, exactly. Like it's just Solana at one point was a top 5 crypto, right?
Over $200 at one stage, I think.
Yeah, I think I remember $240 from memory, but like it's crashed it's been pretty crazy how it has crashed. And I know Bitcoin might be a quarter of its value a year ago, but a loss of 75% is far different than a loss of 95%, right?
FTX has fallen from $27 down to about $2.
Yeah. But I mean, FTX, I didn't ever understand FTX. Like I know, I mean, it's easy to say that now, obviously, but it was a token issued by an exchange, but there was no smart contracts like blockchain or any other use case. It was just sort of like a pseudo equity token for the FTX exchange, wasn't it? Like I didn't really
discounted
get that.
Trading fees if you hold enough. You get paid in another token, SRM, if you stake it.
Yeah. Whereas BNB, I'm not saying BNB is in any way great to hold. It's just not. But like it seemed like it had a potential use case when they issued that. Like there was kind of like crypto games and smart contracts and all that built on the Binance Smart Chain. I'm not saying that is long-term use case or not. That's besides the point in a way. But like at least I could kind of understand there was something there, but I couldn't with the FTX one. So yeah, I think that we've got to get away from this issuing your own token kind of idea, because every time this happens, it just gives me less and less confidence that these tokens that are pseudo equity tokens, it's just a way of issuing equity without dealing with the regulations of issuing equity. And that for me isn't a business model that is going to survive. Then the regulators should call it for what it is. If it's equity, it's equity, right? And if it's a security, it's a security. And let's move on. And if Gary Gensler comes out and says everything's a security besides Bitcoin pretty soon, then I think the crypto market's going to get crushed, right?
Do you think it will get crushed just because they're being labeled securities?
I think so, because that impacts it impacts all the exchanges, doesn't it? And their ability to trade those tokens. So, and I think the tax implications are significant as well for the exchanges that trade those tokens. So, yeah, I think it will have an impact. But yeah, if the question is, does Bitcoin have a future, Peter, then I strongly still believe yes. And I have not sold any Bitcoin through this. Obviously, if I had my time again, I might have sold in the 40s and rebought now. But I still strongly believe in Bitcoin as a future monetary good.
As a store of value.
Not yet. But ultimately, I think it has to be like this, just because of all this going on in crypto space doesn't give me any higher confidence in the fiat currency system. I think that's rigged and corrupt as all hell. The difference between the smoke and mirrors in crypto versus the smoke and mirrors in fiat is, we are used to the smoke and mirrors in fiat and we accept them. And we're not as a civilization yet used to the smoke and mirrors that are happening in crypto. And then we panic whenever things don't go away, because it's kind of like a paradigm shift, or whatever you want to call it, in the way we think about money. And we're not comfortable with it yet. We've got a long history, 50 years of history of pure fiat currency. And, my whole life has been in a fiat currency world. So I'm quite comfortable not understanding anything behind the paper money that I use to pay for things in the shops, right? But I haven't. Most of my life has been without crypto, so crypto is new, and it's something that most people will be distrustful of for a while. But I think that'll shift. That'll come around, and Bitcoin, I hope and believe, has a future. And I don't know what this is going to do to the companies like MicroStrategy and countries like El Salvador, and that is a worry. In the near term, I mean, I saw some rumor that El Salvador had their Bitcoin on FTX. I really hope that's just a rumor, because I can't imagine that being the case. But if that is the case, then that's brutal.
It would be brutal.
And I don't think it can't be right. Like, they held enough.
No,
they were getting advisors.
Rumor.
They were getting advice from some pretty clued up Bitcoiners. So there's no way that would have happened. So I know, I'm sure that's just a Twitter rumor. And then there's going to be, like, if one of those big players falls, like MicroStrategy, and they're forced to sell, like, we're going to see some massive capitulation in the market. And then there's the big mining companies that have invested huge amounts of money buying a large number of those ASICs, S19s, whatever they're called. And I saw a graph of the hash power of the mining network, and how it's dropped off as miners are all switching off their rigs because they're more expensive to run than the profit at the moment. So you're definitely going to have a difficult adjustment down in the next adjustment in the Bitcoin network. And so you're going to get a market that's flooded with cheap mining equipment. So if you've got some cheap energy at home, now's your time. Yeah, the market's going to feel more pain, is basically. So you're going to have miners, people that hold Bitcoin, potentially countries, and those that are caught by the FTX contagion, and that's all going to come out in the next few weeks.
So a question for you both. 6 months from now, so we're saying about May 2023. What's the market going to look like? What's the industry going to look like, including Bitcoin?
If you look back at our first episode, Bitcoin, like when we talk about the character traits of Bitcoin, like that hasn't changed. And what Mike keeps alluding to is it will never change. Like, the value that we place on Bitcoin and its value proposition is already there. It's just it just feels like it's all the bad actors in the space, all the centralized platforms, and I guess human greed and human nature that's kind of uh, putting like a putting like a roadblock in the crypto space. But I use the word crypto loosely, but I couldn't even tell you what next week's going to look like, to be honest. So if you're asking me what May 2023, I hope I hope the industry is still around. That's my genuine hope.
But and just on that, isn't it funny how last week we were talking about JP Morgan using DeFi and the MAS sponsoring it and Singapore banks as well. So like the industry, the big players or the traditional players are moving towards DeFi, the new frontier. And then we just had this collapse this week. So it's like you said, we don't know what's going to happen next week, but I'm trying to get us to look further beyond than like what's happening at the moment where it's all blood and death. So, I mean, Mike, what are your thoughts around what we could look like in 6 months' time?
Well, I predict Ranald has a few more wrinkles around his eyes. I'll probably have lost a bit of hair. I'd say I'd go grey, but that's already happened. No, I don't ever do price predictions, so you're not going to get that out of me. But I would say that interestingly that you mentioned DeFi, because I'm not yet convinced that DeFi doesn't have a future. And most of the largest collapses that have happened have been CeFi collapses, not DeFi collapses. Like it feels to me like I've got more trust in code than I do in centralized third parties. So if you asked me if I was going to, say for example, I was interested in staking Ethereum, I'm not saying I am or I'm not, but would I do it through Coinbase or would I do it through like Rocket Pool or RETH or Lido or one of those kind of platforms? I'd probably do it through a smart contract platform than I would through a centralized platform. That I seem to have right now more faith in the code than I do in the human players. So maybe there is a shift in that direction. But in 6 months, I think Bitcoin and Bitcoiners will still be here. They'll still believe. They'll still be having meetups. They'll still be trying to onboard merchants onto the Lightning Network and trying to prove that it is an effective way of paying. I think that the current market presents an opportunity for those that want to take a risk and get in, and those that thought they may be too late. Now, you've got your chance to buy Bitcoin 3 years ago or whatever it is. So, why not? I think that there has to be. I think in 6 months we will have a solution to regulated custodial for retail investors. I think that's something that the industry needs because this is hurting too many people that crypto gave them hope, and now that hope has been dashed. And I think that is pretty awful. And unfortunately, people and the media are going to blame cryptocurrency in general for that, and Bitcoin will get caught up in it, and that really irks me, really hurts me, and it goes against what I believe Bitcoin is here for. So in 6 months, I don't think we will be completely out of the woods. I don't think you will be out of the crypto winter. I think this is going to be a sustained period of rebuilding trust. But the strong will survive, and hopefully we'll rebuild in a more trustless way that is more in line with the vision that Satoshi had when he first issued the white paper. So that's my 2 cents, Mr. Nash.
So one of the things that I'm curious about is I'm not sure what 6 months is going to look like down the track. I agree regarding Bitcoin. I think it just the more this kind of thing happens, the more you have to question its value, and that just gets validated more and more over time. So I think it's a good thing for Bitcoin. I think with the industry as a whole, we've already started to see miners consolidate their resources. And you mentioned earlier that mining rigs are being turned off because power is too expensive. So I'm curious as to whether the general population is going to notice the impact of mining rigs being turned off. Is that going to reduce the demand for renewable energy? Because we know that one of the things that mining rigs helps is to provide a steady stream of demand to account for the fluctuating supply from these newer sources of energy. So I'm curious about that. I'm curious about where traditional banks go with DeFi in this industry. It would, in my mind, it's a risk-off play from their perspective. They don't, the CEOs and CFOs and CTOs would be saying, look, we only want to take minimal risk in this space. So if we're doing stuff, let's test it out. Let's see what the technology is like, but we don't want to risk much here. So I can't imagine many firms are going to be encouraging clients to get involved in this industry from an investment perspective. So I think they're just going to be exploring this industry from a technology perspective. It's going to be slow, and it's going to be as risk-free as possible from their perspective. On the accounting front, I don't think much is going to change because we've already had the updates that we've had. And then on the regulatory front, I think that, you know, on the call this morning, they were calling for Gary Gensler to resign because they feel like the regulator has passed the buck. Like they've deliberately gone slow on this, whereas they could have been much more decisive and started regulating this sort of a decent time ago. So on the regulatory side, I think it's got everybody's attention. I think this is a watershed moment. So I think, like you said, we're going to see some kind of action there, and I think it makes sense for exchanges and anyone who's has custody of client assets, you know, has to be accountable under a appropriate regime. So that's my two cents worth. And probably the last thought actually is self-custody. I think like you said, that's going to grow even more. So yeah, they're my 2 cents or 20 cents or 50 cents worth.
Inflation, mate. Inflation. Yeah. And maybe there should be more focus on, like, you know, setting up a node and like being part of it was envisaged for Bitcoin initially. Like run your own Bitcoin node. It's not even that expensive to do. Like I don't run a Bitcoin node, but I really should. And like maybe we should focus on that side of Bitcoin.
I guess what do you fear is going to happen, and what do you hope is going to happen?
What I fear and what I also feel is going to happen is I don't think FTX is going to get a bailout. I think FTX is I think the writing's on the wall. And then from there will be a cascading domino effect on other institutions in the space who have exposure to FTX or who have lent money to Alameda, or money or crypto to Alameda. And ultimately, you know, as the price of cryptocurrencies continue to drop, they're just not going to be able to meet their margin calls. And that's what I fear is going to happen. And you probably see a similar theme to what's like one of the better analogies that was described to me is when 3AC Terra Luna happened it's just an earthquake, and this to me feels like the epicenter where FTX is the center of everything, and then a couple of days later you start to see some aftershocks, and the aftershocks will get smaller and smaller, but each time they're still going to be victims of these aftershocks. What I hope will happen is I just hope that I hope this doesn't spark too many, I guess, people pulling out of the market. I hope people, rightfully so. I hope people start to see the value in self-custody, the value in, you know, just holding your own Bitcoin, not your keys, not your coins. And this is the ultimate example. Like there's a lot of people that I speak to at, friends at work. It's like, if FTX goes down, like the whole industry is blank. And I didn't think we'd be in this position. Like I honestly didn't think we'd be here and having this conversation. So yeah, it's a wake up call for myself as well. So I have my own self custody coins, but I also had a bunch sitting on exchange. So yeah, expensive lessons.
Expensive lesson.
Ranald, my understanding is that Binance wasn't a platform that people in Singapore were allowed to use for regulatory purposes, and therefore more used FTX as their default, and therefore the pain for the retail investor would be quite significant in Singapore. Is that an accurate statement?
Yeah, it is. So we're banned. So I think Binance got banned about a year ago by MAS. So you can't even access the platform from the country. But FTX you can. So it will be interesting to see how the MAS react through VPN. Yeah, maybe you could. But legally not. But yeah, this will be interesting to see how the MAS react to it. So.
Any other closing thoughts before we go on our merry way?
I think Ranald summed it up nicely with not your keys, not your coins. I think that's the biggest lesson that all of us can learn, and everybody should learn from this episode.
Gentlemen, it's been a pleasure. Hopefully the markets are kind to us over the next few days.
Yeah, it would be nice to get some good news out of somewhere, wouldn't it?
Would be.
Cool. Nice talking, guys. Have a lovely evening.
All right, ciao. Take care.
Cheers.